Hey guys, this is Andrew for TradingSenses.com, and I've been working as a trader for several big investment banks in the past 5 years, like HSBC or Commerzbank. And I've just started to make some YouTube videos where I want to talk about everything I see at work, the news, the market, the different trading techniques. So if you guys want to know about the different tools and strategies that you can use to make money on the market, you are in the right place. Now, let's get into it. Alright guys, so in this first video I would like to make some technical analysis with you on the S&P 500, the Euro Stocks and the Nikkei. So for those who don't know what is technical analysis, it is just about finding some support levels and resistance levels in order to kind of build a framework where you feel comfortable to trade, where you can more easily find your stop loss and your targets to set up some nice risk reward trades. So let's start with the S&P 500. So this is the chart I'm having here. So I like to use on my charts the moving averages, so 20, 50 and 200 period moving averages, and the MACD, which is a momentum indicator. Then I tried to make some trend lines in order to know where the market could be possibly heading. So for example, I can show you how I did here. So basically, to build a trend line, you only need to connect the recent highs or the recent lows. So for example, here I can see that I have a move down, and I can draw a trend line that is starting from the top here, going through this middle top and until here. And as you can see, once this trend line has been broken, the market just did a move up, and then we have another move down and another move up. So basically, trend line helps you guys to find some stop loss levels or resistance levels. So here, what I can see is that the S&P 500 to me looks bullish. It looks like we have one more move up to come on this market. Because we basically are trading above this trend line. So the level is 35.20. So as long as we stay above 25.20, to me, we are bullish, and I expect the market to go somewhere around the 3700 area within the coming month. And I'm going to show you why. So to do this, I'm going to use Elliott wave theory. So very quickly, Elliott wave theory is basically saying that moves up are developing in 5 waves and moves down are developing in 3 waves. So you have 1, 2, 3, 4, 5 pattern for moves up and A, B, C pattern for moves down. Actually, it's not moves up and moves down, it's motive waves and corrective waves. So a motive wave is in the direction of the trend. So here the trend is clearly bullish. So if I have a look at what happened after the COVID-19 crisis and March lows, we had a nice recovery. So I'm going to try to find 5 waves here in order to kind of try to guess if this move up is finished or not. So to do it, I use Elliott wave principle. So I try to find 5 waves here. So 1, 2, I would put a 3 here, 4. So 4 could be here or here, it doesn't really matter. And a 5th wave that is coming somewhere here. So why do I think things are like this? Just because, as you can see, this, could have been like this. Sorry. If I do my 5 waves like this, all right, this could be possible, but then we should have a kind of deeper correction than this. It should be a correction in time and spot. So to be corrective enough, this move should be corrective for at least, half of the time this move up lasts. So this lasts around 2, 4, 6 months roughly between March and September. So I expect at least 3 months of move down. Here I had only actually 2 months of move down, and it didn't go very low. So to me, we are still in this first move up. So that's why I think that we have a 3 that is here, a 4 that is somewhere here, and we don't know where the 5th wave could go. Actually, we don't have that many tools to know how high this market could go. We have Fibonacci. So Fibonacci is just basically using some ratios that often happen in the market using the golden number. I would do, for those who are interested, some videos where I explain into more details how is Fibonacci working and how you can use it when you trade. Personally, I like to use it a lot. It's something that is working well for me. So here, Elliott wave first. All right. So we are in, to me, the 5th wave of this whole move up. Then we're probably going to have a deeper correction. All right. But before that, I think we're going to be bullish for at least, the 3rd wave lasts. So as we saw, around 5 months. The 4th wave lasts 2 months. So I expect the 5th wave to last at least 2 months as well. So 2 months would bring us in the end, like January 21, something like this. So around here. So I expect this market to go higher until at least January 21. And in terms of level, I just did a trend line, that is connecting the two most recent highs that we had here. And it's basically giving me, as I said, some kind of framework where I know the market must be, because you never know for sure, but contained. So I'm pretty sure this market won't be trading long above the red line that we have here. So this brings us at, like, let's say it's gonna last until, like, I don't know, February at 37.50. So this is my target on the S&P 500 for the coming months, 37.50. And this would be invalidated if we break this blue trend line that is here. That is actually the upper band of my 4th wave that is here. So if we trade below roughly 3,500, I would reconsider my analysis and maybe I would do things differently. So what kind of trade can we make here? Because this is what we are interested in. What kind of trade can we make? So for example, we could buy, so you need to find, so now we are bullish. So we need to find some support level where we have at least 2 different signals coming from 2 different indicators. So it's more likely to be true. So here, for example, I have the moving averages. I have the MACD. So the MACD is clearly positive. So the MACD is already giving me a signal that was here. That was actually here. So the MACD would say to buy here. Why not? To me, it's like a bit overextended to buy here. I would have waited, for the market to come back on this trend line. But anyway, so the MACD won't give us any good signal here. So the signal could come from Fibonacci or from the moving averages or the trend lines. So for example, what I would like to see is something like this. So the moving averages coming here and the market coming like here. All right. And this would be a nice level to buy. Let me show you quickly if I go to the 4 hours time frame. And I'm going to show you how to use Fibonacci. So Fibonacci, as I said, is using some ratios that we see often happening in the market. So for example, here, if I use Fibonacci retracements, I just connect the recent low and the recent high of the last move. So I want to see how deep this move can retrace. So I connect this level with this level, all right? And this is giving me some levels that you for sure would have some liquidity, some hedge funds buying here, or some retail investors like you and me that would use Fibonacci as well to buy. So this is the reason why all these indicators kind of work, is because there are a lot of people using them, and the levels you find are levels that other people see too, and where you have a lot of liquidity, a lot of support. So for example, here, what I can see is that this level, if the market comes here, so on the 24th, 25th of November, so next week, if the market comes to 3,500, it would be actually a very nice level to buy, because we would be retesting the trend line that we broke 2 weeks ago. For the second time, it was retested here once, here almost retested, but if we retest it again, it would probably act again as support, and we would have the 38.2% Fibonacci retracement, which is very followed by a lot of investors. And we also would have the moving averages that would be in this kind of area. The 50 period moving average would be in this area. So this would be for me a nice level to buy, and you could then expect a nice move up. So you just buy here, and you stop loss your position maybe around like 34.50 or something like this. So if you want to have more, if you want your trade to be more likely not to be stop lossed, you can have a stop loss a bit lower, but then you should invest a little bit less. It's all about risk management. So here, if you buy here, then you could have, 8% move up, something like this. All right, 8%. So I buy here, and my target is here. So it's a very nice trade. And how much you can lose? You can lose. So if you buy here, you stop loss here. Okay, let's say 2%. 2%. So you have a risk reward of 4. So you can win 4 times more than you can lose. So you only need to be right 25% of the time. All right. So technical analysis is not about being wrong or right. It's not about always being correct. It's about risk management and about risk rewards. All right. If you write only 25% of the time on a trade that has a risk reward of 4, then you are profitable. So that's it for me on the S&P 500. Let's have a quick view on the Euro STOXX. See how the Euro STOXX is behaving. So Euro STOXX, so same, this is February, so this is the highest level the Euro STOXX actually traded before the COVID crisis. So let's start with the daily chart. So same, I'm using my moving averages, I'm using the MACD, and I try to make some trend lines, all right? So the first trend line that to me is the most important one, and that occurred actually just before the COVID-19 vaccine news, where the results of the phase 3 test of the laboratory Pfizer, I think, was positive, effective at 90%. Then we have Moderna that also had some very good results on its vaccine test with like 95% of effectiveness, so which is very good news for the market. And as you can see, the market reacted very positively to this. So here it was kind of a very strong move that was not easy to trade. All right, not easy to trade because, as I said, so we have a trend line that is here. Okay, so I connect the high that is here going through here, and as you can see here, I have already a reaction. All right, so this trend line is visible from then, because you already have 3 nice reactions. Then here you have a 4th one, so definitely everybody is seeing this trend line. I mean, everybody that is checking this, so you have a lot of support with you. And here, as you can see, we just blew right through it. This was, I think, the strongest move that I saw on the markets in my career, because it was together with the S&P and the Nikkei. All the indices just took, I don't know, maybe 4 or 5% in a matter of hours. So let's have a quick view if we could have how we could have traded this. So I go to the 30 minutes time frame, because this is how, if you do day trading, this is how you trade. All right, You are in a 30 minutes or 1 hour time frame, and you basically spot some resistance, and once you go through it, you know, it's kind of the time to buy. But you never buy the breakout, guys. Never buy the breakout. It is too risky because you don't really know where to put your stop loss. You wait for the trend line to be broken, and once it comes back to it, then it's the time to buy. So for example, here it was not easy to get this one. All right, definitely you didn't have much opportunity to buy here because it was not retested. All right, and this move was just insane. This is a 6.5% move in that happened in all right, 3 hours. 3 hours, 6.5%. It's like, you know, it's just insane. So then what happened next? We just blew right through this trend line, as I said. So from here we're bullish, and then we had another resistance that was, to me, quite clear, and that you see well in the hourly chart. So this is the green line that I have here. So I just connect, you know, the maximum, the highest point that I had before the breakout. So this is this point, all right? And as you can see, so here it was a bit messy, but here I have, so here this trend line acted as resistance, and here it acted as resistance as well. So this level is, to me, something that is quite watched by the other investors. And as you can see, we broke it and we came back, we retested it. This was, for example, a nice trade to set up. You can buy here, stop loss your position here, and then you have this move up to come. So what can we do now? So as I said, I'm bullish on the S&P. So of course, those indices are all correlated, and we have good news coming from the market. We have Biden that has won the US presidential elections. It's not all, it's a bit denied still by Donald Trump, but markets don't take him very seriously. You know, he's using some tricks that are a bit ridiculous. He's saying, for example, that the Democrats voters, a lot of them are actually dead people, and he also, like, his supporters gave a list of those alleged dead people, and actually a lot of people say, sorry, I'm still alive, it's me, and just the list was completely wrong, as a lot of things that he was saying after he lost the election. So basically, markets are not taking the threat very seriously for now. The only issue could be, for me, kind of more social tensions between Trump and Biden's supporters. But for now, it is contained, and Biden is just waiting for Trump to be tired of denying the truth. It's that he has lost the election. So the markets are happy that Biden won because he has a very strong stimulus package that would come. It's about $2.2 trillion, which is more than $2,000 billion, guys. It's very big money. So, and this insane flow of money is actually what is driving the markets higher. All right. So the vaccine news helps, but the reason for me for those markets to go up, despite some bad economic outlook to be coming in the coming month, years, is that there is an unlimited flow of money in the markets, and this money needs to go somewhere. So it won't go in the rates because the rates are very low. As you know, to sustain the economy, we have some very accommodative economic policies with some very low rates. So you won't buy those rates because you won't receive much for your money. So you buy the equity. That's what all the big institutional clients, hedge funds, are doing, because they have no choice. They need to find some return somewhere. And so they find it on the equity market. So this is the reason why it will go higher for me. And how far it can go, this answer can be given by technical analysis. So once again, I come back to the Euro stocks. So here, this is now our strongest support, all right, at 3,400 roughly. So what can we do? Same as on the S&P. We won't buy here. we will wait for the market to come retest again this resistance. And once again, we are trying to use some levels where we have signals coming from different indicators. So once again, what kind of indicators we have? Trend line, moving averages, MACD, Fibonacci. So if I do some Fibonacci reasoning here, I'm just connecting the lowest point here with the highest point here, and I would say that the nice level to buy is, as always, the 38.2% or the 50% FIBO retracements. Those levels are very watched by other investors, and you will find liquidity here that would push the market higher. You have the moving averages that is already higher. So as you can see, the moving average is already above the 50%. So if the market comes back here, you could buy already, but I wouldn't take this trade because this move has not retraced yet, and I'm a bit afraid that after such a strong move up, we could have some deeper correction than only 1.5%. I think that this market needs to, get some fresh energy, some fresh liquidity, and to find this liquidity, it needs to go a bit lower. So I would say maybe a 5% move down in the coming weeks would be a very nice opportunity for us to buy. So once again, I'm bullish in the coming month, but I'm kind of neutral, almost bearish in the coming days, weeks. I think this market has been extended a lot since the US presidential elections, so early November, and that it needs to correct to push higher. It needs to correct first to push higher. So we can see that here, let me go to the 4-hour time frame. So in the 4 hours time frame, you can see that the MACD is already negative. All right, the MACD is positive, but we had the crossover of the MACD and the exponential moving average of the MACD itself, which is the signal given by the MACD. So here we have a bearish signal. So maybe we can wait for this to become green again. We can wait for the MACD signal to turn positive, and we can wait to come at those levels. So I would, for example, the kind of trade I would do is to buy here. So buy at 32.70, buy again at 3200. All right, you buy once, you buy a second time, because I'm very convinced that this market would go higher. So I'm okay to buy at different levels, and you stop loss your position here. All right, so for example, you buy here, you buy here. So in average, you buy at 32.35, and you stop loss at 31.70. So it's like 60 points. So you would lose 60 points, and how much you can make, guys? Where is the next resistance? Here, it's almost a no man's land. All right, we have no more resistance coming before the big one that is here. So I think this market, so if you buy here, all right, you can have a 17% move up, guys, all right, in the coming month. So I think that this is a very nice risk reward trade that you can do. Last but not least, Nikkei, very quickly. So we have the same environment. So we broke some major, so let me go back to the daily. We broke some major resistance during the US presidential elections and after the vaccine news. So the resistance level was 24,000, and we are just going higher every day since then. So where this market could be heading, same kind of reasoning. I'm trying to find a level where I have different indicators giving me a signal. So I'm using trend line once again. So I connect the two most recent highs here and here. All right. And so this trend line is giving me some resistance. And if I go to the weekly, I want to try to see where is the highest point before that. All right. So as I said, here is like a bit as on the Euro STOXX, even more. It's a complete no man's land. It has been an area where the Nikkei was not going since 1991, guys. And the highest level in 1991 in March was actually 27,000. So I'm pretty sure that the Nikkei is going there. Did it go there before correcting? I don't know, but I won't buy here, because if you buy here, you need to stop loss here, and your target is here. So basically, your risk reward is quite bad, because you can lose 6% in order to make 5%. All right. So this is not a good trade. This is not the kind of trade that I like to take. So I would wait for the market to come back here, and I would do as I do on the S&P and on the Euro stocks. I would buy here, and I would try to take this move up about 13%. And how much would I be ready to lose for that? I would put my stop loss maybe here, you know, so I would lose maybe 2%. So it's a very nice, okay, 3%. I would put my stop loss here. So once again, where would I put my stop loss? I can use this trend line to make a stop loss just below it. I can also use a trend line. So let me go back to the daily. And I can say that, for example, if the market is going, oh, sorry, this is not what I want to do. All right, bam, bam. So this is my trend line. So for example, here you can see if the market is going below this one and this one, and for example, we also have the MACD turning negative, this is really the time to stop your position. All right. So this level, 24,000, would be a nice level to buy, and you stop loss just below it. Okay guys, that's it for me. I hope I managed to make myself clear and to show you some cool things that I like to do. So once again, I repeat, I like to use Elliott wave principle, Fibonacci retracements, trend lines, MACD, and moving averages. This is how I build my framework and where I'm comfortable to take some trades. Alright guys, that's it for me. I hope you enjoyed this video, and if you did, please hit the like button and the subscribe button, so you're gonna be the first to know when I upload anything new. It also tells me that you liked what I do and that I should keep doing this. And for those who trade today, be careful guys, we still expect a lot of volatility up ahead. Stay close to shore.